Are you overpaying for home insurance? A recent study showed that in Florida, home insurance rates have increased 70% in the last 5 years. And on today's show, we're going to show you how to save thousands of dollars a year. My name is Jack Goggin, and you're watching Jack's List, a show dedicated to bringing the average consumer the insider expert information into all things real estate. And today I am joined by a friend of mine, Dennie Nave with State Fund Insurance. Welcome, Dennie.
Thanks for having me.
So let's kick it off.
Okay.
First things first, it's the hot button topic. Why are the insurance rates going up as quickly as they have been?
The 70%, you mean, over
Yep.
the last 5 years? Some are a lot higher than that.
Yep, I've seen it.
Yeah. Well, you can blame that on the litigation, first of all. What was happening was when storms came through or hail damage or whatnot, they would people were told to hire a lawyer. Roofers would go around, knock on roofs. This is
Yep.
for home insurance, right?
Yep.
And they would say, well, I want to file a claim, right? And one of the things they would do is they would say that they needed a new roof. And the roofer, whether it was ethical or not, would say, I mean, I had it happen to me. The guy didn't know I was in insurance. He said, just call it. We'll get a new roof on there. So the reason for the rates going up is every time someone calls in a claim, brings in a lawyer, they need to go and defend themselves as well.
Yep.
That costs thousands of dollars per case. Okay. And one of the things they're doing to fix this now, just so you know, is the roof. People were getting new roofs, right? Whether it was 5 years old, whether it was 10 years old, right? Let me ask you a question, okay?
Yeah.
If you had a 2015 Honda Civic,
Yep.
right, and you turned it in, would you expect the trade value to be a 2025 Honda Civic?
Nope.
No. So what they've done, and one of the things they've done to try and keep the cost down a little bit that people need to be aware of is actual cash value for your roof. Okay, so they determine how much it's
Yep.
worth
You have
at the
5
time.
years left on it.
Correct. That's
we're
what
not
you're
paying
getting.
For the all new car.
But
Yep.
the reason they're going up is we're still trying to recover from what has just happened, and now that's actually, I sell in 30 different states. That's happening in every state now, the age of the roof.
I believe
So
that.
as the litigation, the cost of materials to go up to the insurance companies cost more than it would for you or me if we went to get lumber at Home Depot. So that's the main reason, okay? A lot of companies went out of business last year. 17 in the state of Florida just went under.
Yep.
Completely gone. Nothing you can do. You have a claim, they're gone. No one answers the phone. The phone lines are cut off. So yeah, it's been a mess. And so it's really important when you buy insurance, especially for your home, that you know the reputation.
Yep. And what's been so interesting, kind of funny, probably not as funny to you in your world, but in my world, when I'm representing buyers, where going back 5-7 years ago, there was this very even spread on ages of roofs. One would be 10, one was 15. Now, the number of roofs that you come across that were replaced between like 2020 and 2023 is unbelievable. Almost everyone has a new roof. And if you're a homeowner, we all know we've gotten those calls and letters going, free roof inspection. Let us find out if there's hail damage and if there was a ding somewhere.
That's right.
All these people and great for the homeowner, they got the free roof. But downside is now we're paying for it today.
Correct.
Yeah.
That you're paying for it today.
And I didn't get the free roof, so I'm upset.
And neither
now.
did I.
Yeah.
Right.
Yeah.
So, I mean, that's another reason people are upset.
Yep.
They're saying, well, I've been ethical
Yep.
all the way through. I shouldn't have to pay for someone else's. And, the insurance companies can charge whatever they want. You're free to look around. But that is that year, those years you were just talking about,
Yep.
2020 to 2023.
Yep. Everyone has a 2020 to 23 roof.
Yeah.
All of a sudden.
That's it.
And when we're talking about where I regularly represent buyers, and I know enough just being in the industry and talking to you of what should buyers be looking for to make sure, they find their dream house and it turns out you have red flags all over the place, or maybe you can't even get homeowners insurance.
Sure.
what are the main things in Florida that buyers should be looking for when choosing which house they want to put a contract in for?
Okay, so there's a few things. One is the roof that we spoke about. Two is the age of the home. Okay, an older home is going to cost you more than say, I mean, that seems pretty obvious,
Yep.
but some people would say, well, it's all redone. Doesn't matter. They take the year that it was built.
Yep.
Okay, and then you can put in the upgrades or whatnot. Another thing too is in Florida, a lot of us have bodies of water that we live near. They be big or small.
Yep.
Find out if you're in a flood zone. Find that out before you're too emotionally involved down the line,
Yep.
where you've gotten all the way down. I know you would tell them, but the other, realtor doesn't tell you, and you're at the 1 yard line, and now you need a $3,000 flood insurance. So just find that out. That is incredibly important.
And that just in the last couple years, going back over the last 4 years where we've had these hurricanes come through and dump the amount of rain that we didn't even think was possible, where it's totally changed our perspective in the real estate industry of, for years, you would look at a house, go, it's outside the floodplain zone. That's good enough. Now we're looking and going, well, the neighbor behind you is more elevated, which means, you're going to get the runoff, and, how many drainage ditches are in here. And now we're having to look at homes that weren't supposed to be able to flood. A lot of them flooded in the last couple years.
And usually what you're looking at to get if you're in an optional flood zone in the state of Florida, you're looking anywhere between $500 or $600 a year. So it's not that much in comparison. Just to get it on there, you'll get $250,000 worth of coverage for your structure, $100,000 for your contents. So something to think about.
And side note, this is more for the average consumer should be aware with their real estate agent is, well, we have our seller's disclosures. You need to ask questions and study the history of flooding. How long have you owned the house? Did you own it through these past hurricanes? Because if it flooded, I know my house has been fine through the last couple storms, but we'll have standing water. 3 doors down on another side of the street, they all flooded.
Right.
And that needs to be disclosed, or you need to ask the question. Or else next storm, because the amount of rain's just been unbelievable.
Yeah, it really has. There's a lot of rain, a lot of damage, a lot of people who didn't take flood insurance.
I've seen so many more people asking about flood insurance, or now knowing flood insurance isn't automatic for, just because you have home insurance, if it's a flood, it may not be covered. So when we're thinking about specifically in Florida, where we have a lot of hurricanes, what are the things that homeowners should be aware of? Like, you may not be covered for home insurance when we're thinking about hurricanes.
You mean flood insurance?
Flood insurance. Yeah.
Okay. When we're thinking about hurricanes, here's the thing. A lot of people price, right? But you've also got to understand this is probably the biggest investment you've paid for in your life, right? So you want to cover it right. And for, let's say, $50 more a month than the other guy, you want to make sure you get a reputable carrier. You want to make sure that your deductible on your hurricane isn't some outlandish number that they've put in there that you don't see. So in Florida, there's choices of 2%, 5%, 10%. Now, what does 2%, 5%, 10% mean? Say for a number's sake, you buy a house that needs to be covered for $500,000. 2% of $500,000 is $10,000. That's your hurricane deductible. Okay. Well, sometimes people will sneak in the 5 to get the cost down, right? I mean, the buyer may not even know this or what it means, but 5% is what? $25,000. How much is a roof? Right?
Depending on the size, maybe less than that.
It could be that, right? When you're buying a house, though, any roof that's over 15 years old, that's asphalt shingle, no go.
Yep.
No go. You're going to be paying astronomical amounts. Tile roofs, depends. Sometimes it's 30 years. Usually it's up to 20 because you know how they crack.
Yep.
And the things that you're going to have to get fixed anyway if you want to stay insured. And I will tell you, the inspection companies are out there fast, very fast. They are not waiting around anymore.
I believe it. Or certainly after just the last couple years.
Yeah.
And let's see, because this has been a recent change where for years, Florida homeowners have been able to have coverage on, really the rule of thumb was 20 years. And now my understanding is the roof can be covered if it has 5 years left of expected life. And that's where we're getting down to the 15-year number is kind of.
Yeah, and again, the actual cash value of the home.
Yep.
Right? I do have carriers that do replacement cost value. Okay, so you would get a brand new one, but that's usually roofs that are 7 years or less. I'll say 5 years or less, just to be safe. Okay, but they all don't do that. Just the big guns. But the big guns are going to cost you a little bit more. And big guns, I mean national carriers, not somebody who started out of wherever and then they're going to be gone in 4 years.
Yeah, which that's another thing we've seen a lot of recently.
Yeah.
What are some of the issues that we see when you go with someone who may be gone in 5 years?
They're just, you don't know if they're going to be gone in 5 years.
Yep.
Because your agent has told you, if you really want this price, the agent should tell you, look, their reinsurance. What is reinsurance? Okay, so that's where you deflect some of the risk off to another insurance company that helps the insurance company. We're talking all different channels here. You want to look at how big they are, their book of business. How much do they have in reserves, right? In case a storm does come through, are they going to be flat out, or are they going to be able to make it?
And is this something? Is this information that's easy for your average consumer to come across, or is that something you're relying on the insurance agent to really know? It's
something where you can ask and find out even easily on your own. The Better Business Bureau, they'll usually tell you the rating of the company.
Yep.
Because look, I don't know about real estate, but insurance, when you start going to the Google reviews about companies, the only reason people go online is they have an axe to grind.
Yeah.
They're not going to go on and say, hey, you know what? I got coverage. Let me just compliment them. Yeah. No, that's not how you do it.
Yeah, probably not. Shout out Stockworth Realty Group, 5 stars on Google. But normally we're handling, for the most part, we're doing something very exciting for people and they find a lovely house. Chances are when someone's reviewing the insurance company, they have an axe to grind.
Right. Yeah. Very good chance.
Yeah. Different world.
Yeah.
So is there a rule of thumb when what amount or what kind of coverage somebody should have on a property?
Well, I'll talk to you about the difference between replacement cost, and you'll have a mortgage company call you up and say, well, we need X amount because this is how much money we're lending them. Or we only need this because this is how much we're lending them. That has nothing to do with what we do. There's a replacement cost estimator that's very detailed now, especially with technology. They're able to pull all the specs of every home. And they come up with a rebuild cost. And usually it's a little bit on the higher side, but that's what you need. And the company's not going to write you unless you go with that. Okay, so for example, I'll use Massachusetts where I write a lot of business. Someone could buy a house I had one the other day where they bought a house for 6,300 square feet. They got a steal on it, 1.3 million. I'm telling them they need 2.3 for the insurance. And they're telling me, well, I bought it for 1.3. I'm telling you that if it burns down and something happens,
you're not building it for 1.3.
Right. And I can show you that with the breakdown and the debris removal. So people need to make sure that they're going with a company, I would say ask friends, but a lot of times I get calls and they say, my friend does this. I said, does your friend have their insurance license?
No.
Then
probably don't listen to
But so it's just everyone's looking. If you're looking for a way around it, there really isn't.
Yeah.
Is what I'm saying.
Yep.
Like I told you earlier today, my son got his license, 16.
Yeah.
There's no way around the insurance going up.
And he's a boy.
He's a boy. It's the prime person they don't want.
Yep.
So I just accept it as it is, but he's covered.
Yeah. So, what are some ways that the average person can lower their insurance costs? Are there tricks or questions they should be asking without just lowering their coverage
Sure.
and really not
Sure.
being set up well?
Well, there are ways. So, one of the things is, you probably know, the 4-point inspection. The 4-point is not a way to lower it. The 4-point is a way to pass it.
Mm-hmm.
Okay. The wind mitigation inspection can help you lower it.
Mm-hmm.
Okay. And those don't cost that much. So you want to make sure you get that for your roof, a wind mitigation inspection before you buy the property, and ask your agent when they plug in the numbers, right? Because the form is exactly the way it's listed on the insurance application for us when we're putting on the information. One of the ways too, sometimes a company, let's say you have $1 million home, they'll say 500,000 for personal property. People will say, I don't have that much. Well, let's work on a number. Let's lower it to 200,000. And we can do that. We used to not be able to do that. Mm-hmm. Now we can do that. If it's a rental property, okay, no, I really can't help you on that.
Yep.
But going back to the primary, the other way, like I just told you before, you can lower the price if you raise your deductible. If you're willing on your regular deductible to say, okay, I'm not going to put in any small claims because I know that's going to hurt me in the future.
I'll just cover it.
I'll go with $10,000 deductible, and I'll cover it myself.
Yep.
Okay, on $1 million home or $2 million, you got enough money to do that.
Yep.
You should,
Mm-hmm.
if you're buying a house that large. So raise your deductible, keep the price down. Don't shop around too much on home insurance, because guess what? When you switch on home insurance, they re-inspect every time. Mm-hmm. And you're putting yourself at risk for a new inspector to find something, and you try to go back to the old one, and they may be closed for now. We're not taking on any more risk. You were one of them.
Yep.
So that's very important too.
Where I've had that just in the last couple years, and hasn't been by trying to change. It's just I was notified that my insurance company wasn't covering anymore. Get the new one, go, all right, here we go. They come in, and actually it's funny, I got in trouble.
You followed the guy around?
Well, no, I just told him, he was just doing an exterior inspection. I went, sure, no problem. The house where I work in real estate. I know the 4 points very well. I understand my house very well. I'm not worried in the least. And I ended up getting in trouble for a abandoned vehicle in the backyard. And what that was a buddy of mine and we did, do you know what the Gambler 500 is?
Yes.
Yeah, 500-mile rally race with $500 cars. So this inspector comes in and he sees this lifted Camaro on like 33s, bumper to bumper, painted like the American flag. And we've flooded this car like 3 times, and we were going to get it ready for the next race. And he went, that's an abandoned car. I'm like, I'll fire it up and show you what this sucker can do. You wouldn't believe and they told me, hey, you got to get that out of there. Never even thought it'd be an issue.
Yeah.
But my wife is pretty happy to have the Gambler car out.
Okay, good.
And I'll kind of preface this one by saying, I'm not telling you that to the audience. I'm not saying Denny's going to be able to do this every single time. But consistently, I've had buyers over the last couple years who they reached out to their friend or their friend's company, and they got a quote for insurance on a home they're looking to buy. I've recommended to them, hey, go give Denny a call. And consistently, you keep being able to provide them with the same coverage that's 25 to 30% less. They get quoted $6,000 was their best, and you were able to come in at $4,000.
Yeah. Those numbers, you just think about the numbers you're using now.
Yeah.
5 years ago, we weren't that high.
No.
I mean, it's just crazy.
Yeah, astronomical.
Yeah.
Where why is it that you guys are really competitive, or that other companies are just priced really, really high?
Well, I'll say that we don't work miracles all the time.
Yep.
Okay. But options. Okay. So we have a lot of different options because we've built the reputation with the insurance companies, and then, other companies see that and they want to do business with us. So we've grown from where we can pick and choose from, right? The other ones, It's like going to the, I don't know, you go to the local store, and they have Coke and they have Pepsi, but we have Coke, Pepsi, Diet Coke, Sprite, Orange Fanta, da 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 da, all for the same, maybe a different price, but that's really the reason. Options. It's really just about options. It's not that we're doing anything different. It's options. And a lot of these companies are told they're owned by, say, like an Allstate, or they're owned by a State Farm or whatnot. I'm just using those. I don't know if they do this, but they're told to really try to focus on their product. When with us, we're not biased at all. We're just going to do what's best for you.
Yep.
Right?
We'll just find the most competitive.
Right. I can't tell you how many times I'm going to say it. Send over a copy of what you have. And I can tell you a lot. I've said, just stay put. Call me next year.
Yeah.
We'll put it on our calendar.
Yeah. That's competitive. Run it.
A lot.
Yeah.
A lot, because they don't want to deal with the mess of an inspector. What are you going to switch for $200 a year? Come on, forget it.
Yep.
It's not worth it.
And why is there, we were talking a little bit before we started the show. Yeah. Tell the audience why there is such a wide spread, because it almost seems like, some of the quotes I've seen my clients come up with, or I go, how the heck did they come up with a number that high? What's the cause for that?
Well, I'll go back to the store. Yeah. Okay. They can charge whatever they want. Okay. So you could go to Publix and you want to get a loaf of bread and it's $4 there. You go to Winn-Dixie, it's $10 there. Same loaf of bread, right? But you and I were talking earlier about why are some so high versus others. Well, my theory is, I don't know if it's true, but my theory is consistently there are companies that instead of saying, no, we're closed, they are just saying, you can tell us no.
Yeah. I'll sell you a loaf of bread. It's just $30.
Right.
Because we don't really want to sell it anyway.
We don't want to sell it anyway. It's a $30 loaf of bread.
Yeah.
And that is something that I think that you're seeing not just in Florida, you're seeing it everywhere.
Yeah. Heard California, where with the fires and regulations, they've had an issue. What are some of the other states that are having issues?
Well, I can only talk about the ones that I know of.
Yep.
So we do New England, we do Florida, and there's other people in our office who specialize in doing, other states. Some of the issues you'll have are, let's see, age of roof now up in New England, age of, pretty much I think they should have 4-point inspections up there. Because the piping, the cold, the burst pipe, things like that.
Yeah.
But the one thing that really, now that you got me thinking, about 15 years ago, Cape Cod up in Massachusetts, all of a sudden that became somewhere companies didn't want to insure. So one dropped out, then another. And then the ones that were left were like, whoa, we're not taking on all these risks. We don't want these calls.
Yeah, too much exposure.
We're hanging out there. Too much exposure, right? So there was a time there where it was tough for us to find anything except the state plan. Because Massachusetts, just like Florida, has its own state plan. I don't advise that when claim time comes.
Yeah.
So I pretty much stay away from that.
Got it. And kind of going back to the store analogy with you guys having just far more options, it reminds me a lot of the mortgage world, where you can go to your bank, and this is something that I find a lot of people don't understand, that there are options where, let's say if you're trying to get a mortgage, you can go to your bank, Chase, and they will provide you with that one option. Or you go to the mortgage lender, who has the wide range of options from all these different banks and lenders you never heard of, but they can help you find the most competitive. The insurance world is similar to that.
Very similar. I have a friend that owns a mortgage brokerage, and he does the same thing. So it's
and would you? I would think the answer is probably obvious, but I want to ask just in case. Would you ever advise someone just go to a singular insurance provider versus someone like you guys who have all the options? Is there any advantage to not not going to an agency?
It's actually good you asked that. One of the tricks that they say is they'll give like the big carriers, right? The ones that you can go direct to.
Yeah.
They'll say, congratulations, you work for X, or you served here, or you did whatever. You get 20% off. Yeah, but 20% off of what?
Yeah.
What's the top number?
Yeah, 120%.
Correct.
Yep.
Even higher sometimes.
Yeah.
So, I've been with Liberty, let's say, for a while, and people say I've been with them for years. I had a friend, he'd been with them for years, and he couldn't believe what I was able to get him versus, and it's just because he wasn't paying attention, He just wasn't paying attention. You get 3 kids.
Yeah.
Just
renew it. Just renew it.
Just pay it.
Yep.
It comes out automatically. You don't write checks anymore. They just come out automatically now.
Yep.
So you got to keep an eye on that.
Yep.
You got to pay attention to that before you start getting letters, especially on the home insurance. You get a letter that your mortgage is going up $350 a month. Mm-hmm. Well, probably because of insurance.
Yeah. And I've heard that from quite a few people, where the one that I try to warn my buyers on is after you purchase a property, the next year, if you purchase from someone who bought that house in the 80s and the assessed value is $50,000 and now it's 500.
Yeah.
Just so you know, next year, those taxes are going to change fast. And the other one that comes up is, they just said we have a debt in our escrow and we have to pay all this money. Often it's either the taxes or the insurance.
Yep.
And I've had that personally and just went, what the heck? I mean, it's been the same forever. Oh, sure enough, Citizens now just jacked it up and, and they want me to break up with them. Where when a homeowner, let's say a homeowner's going to somebody like you instead of just to one of the big, the main insurance providers, the big companies, what are some of the questions that your average person should ask but never seems to?
One of the questions they need to ask.
Yeah. What questions should they ask?
Sure.
An insurance agent that most people just don't know to ask?
Sure. I mean, like we just spoke about, how many options do you have? Can you send me all of your options? Because not all the time is it about price.
Yep.
Right? They want to see the company. They want to see the 3 quotes, the 4 quotes, the 5 quotes, and they want to do their research. Okay? So you want to ask when someone says, let's say someone picks up the phone, they talk to you, State Fund Insurance, well, I have a quote for $3,200. Okay, can you send that over? Well, I want to let you know who it's with. Okay, right? Well, do you have anyone else that you can shop it with and I can see the comparison and the difference between those companies? That's what you want to do.
Yep.
And you want to usually look at the companies that have the A+ rating, they're proud of it.
Yeah.
And so they put it on there.
They don't keep it a secret.
They don't keep it a secret. And that's something you should consider too when it's claim time. Because I've got stories.
I bet. And it's amazing. It's the feeling that I get from a lot of my own clients, whether they're often it's buyers, is I don't think people take insurance serious enough because it's the assumption of, what are the odds? It's been years, and I'm sure you have a ton of stories too. I know just from dealing with so many homes, knowing so many homeowners and clients, the massive tree, the 50-foot tree. God, this was a wild story. One of my clients, and I want to get into this, they're self-insuring, no insurance, and hurricanes were coming on in. And then they reached out to me. They're like, out of nowhere, they go, should we have insurance? I'm like, you guys don't have insurance? Or I didn't know this.
It's too late.
And I go, yeah, you have a 60-foot tree that's like 20 feet away from the house. And I go, yeah, we do. And I think we reached out to you, and it was like 5 days before the storm hits. Like, it's too late. We can't do anything. That tree ended up falling down, and it fell as close to that house as it possibly could.
What'd they do after? Did they get insurance after?
Yeah.
Okay,
Yeah.
good.
Yep. Sure did. Well, all of a sudden,
Right.
and it's one of those things where, what are the odds? But I know
Could have been a lot worse.
yep, I've sold homes that have totally burned down. I know a few people who've had home fires. I had a house that burned down while I was showing it. Some agent, wasn't his fault,
You're
just
kidding me.
where there was an agent showing the house right in front of us. We were waiting for them, kind of a dopey dude, and he walks on out of there and he goes, "Man, house smells like cigarettes." And I thought it was a hot market. This is like 2021. Everyone's going crazy. And I thought he was just trying to beat down the house. We walk in, and me and my client go, "That's not cigarette smoke. That smells like embers." So I go check the appliances to try to see, is a oven on or what's going on, and feeling the walls, trying to just turn everything off and short of just killing the power to the house. And then eventually he went outside, felt an exterior wall, and he went, this feels warm. And it turned out it was probably a handyman special or something the homeowner did. It was this exterior light that had a short in it, and it started igniting the studs behind the wall.
Holy
Started
cow.
a fire, and once we got a hot wall here. We called the fire department. The homeowners weren't at the house. The listing agent wasn't at the house, which is why I like showing all my listings. And fire department came on in, went in the attic, had to spray it down, the whole thing. And thank God we happened to be behind this agent, because he went, "Smells like smoke in here." He would have just taken off, and luckily we were able to catch it really, really early. It's water damage. But I mean, that's why I go, I'm like, being in this industry, stuff happens. It happens
sure
a
does.
lot more than you might think.
Sure
Take the
does.
insurance very seriously.
Yes.
And what are some of the most common misunderstandings that you think people have with insurance?
Misunderstandings?
Yeah, or misconceptions
I think-
about the insurance world. I think we were talking a little bit about it.
Well, I think you kind of touched on it just now, to take it very seriously, because I'm going to go to the auto side now. Okay. People ask, well, what's the price? What's the price on the auto side? I'll say, send over what you have. Okay. I had a woman send over what she had, right? She had nothing. She'd been driving around with no liability at all. I didn't even know that was legal. Like, never seen that before.
Yep.
But she went to some national carrier, and all she had was property damage to someone else's car. No collision, no comprehensive, no liability. And she's paying like $250 a month. I had to go over it with her.
What was she covered for?
That's what I asked.
Yeah.
I said, you realize, so this isn't about price now. This is about getting you properly covered, because you have a loan on this car.
Yep.
I can't believe this was allowed. And she ended up going with us. And yeah, it was more expensive, but she wasn't just throwing money down the toilet. You just got to realize what you're buying.
Yep.
Don't think you're smarter than everyone else. Okay. I'm the smart guy. I don't need it. I'm going to take minimums on everything.
Yep.
And
You're just gambling. Hoping it doesn't.
It's never happened before.
Yep.
Oh, that light story Jack told me, that's never going to happen to me. It can happen.
It could happen.
Yes, it can happen. Ask my screen enclosure from the last storm.
Oh, yeah. Oh, those things just get.
Make sure that's covered too.
Yeah.
Because unless it says on
big numbers these days too.
Yeah, I have companies that are like, yeah, we'll write that excluded. I'm like, all right, well, I can't do that.
Yeah.
So.
And lastly, kind of going down the mistake line or misunderstanding.
Yeah.
What's the most common mistakes you see people make in coverage? Is it just not knowing what they're actually covered for, or just being undercovered?
So in the world of technology now, a lot of people don't answer their phone, right? So it's very difficult through text and through email to ask the right questions, to understand, have a good conversation about what you're buying. And the mistake they make is they're not reading or not understanding.
Yeah.
Or not choosing to read what I'm saying to them, and they're going strictly on price.
Yeah.
Now,
With the big number at the bottom.
Right, but I know when I get an email, make it short.
Yeah.
Because I don't have time. So I do the bullet points, bang, bang, bang. Call me if you have any questions. and then it's either they're gone, it's crickets, I don't hear from them, and they went with someone else. I don't know what happens when they go with someone else. I just don't.
Yeah.
I'm not interested either. But I think the biggest mistake is, let's have a old school conversation. Okay? Old school. Don't just say, what's the bottom line?
Yeah.
Not with me, with anybody.
Yeah.
You know, you get some people, really, they're like, okay, I'm going to do this today. So they're calling 20 different people. Then they lose track of who's who. And then they just come to the end. They go, all right.
I'm tired and confused.
All right, I'll just go with the lowest
that
one.
number looks good.
Yeah.
And without knowing, we're almost like that one gal who was paying for insurance, wasn't insured, where know what the difference is. Because I know we've had conversations where, there's a 2,500, a 28, and a 3,000, and there's advantages and disadvantages to each one, just besides going, lowest number sounds good, sign me up.
Right. And listen, you and I would both rather have A-rated company that's going to pay your claim for 3,000 versus someone who's 2,600 that you don't know is going to be here.
Yep.
Come on.
Because if something happens, you're going to kick
What's
yourself.
that a month? $30?
Yeah.
So,
And last question, and I'm hearing and seeing this more myself, is self-insuring, of just going, I own the property outright, where I have clients that I just know financially and with the purpose of these property, let's say some raw land or something, where I go, there's a lightning strike thing that could happen that might threaten other people, where you go, but generally speaking, their risk might be really low, and they're financially in a situation where they go, I can rebuild that property 5 times over. I'm not worried about it, kind of thing. Where now we're starting to hear, though, more concerning is people going, let's say it's elderly individuals who they've just owned their house outright, and they're just looking at the numbers going, I literally can't afford to. And they're just self-insuring, feeling like, there's not much of an option. Where at what point do you tell somebody that the amount of liability they're assuming, they really just are not suited to cover? When should somebody self-insure, and when should someone go,
I'll give you an example. So last year I had somebody, when was the large hurricanes that came through Tampa? Was that September?
Yeah.
Okay. Yeah. The first one that went right up the coast. Okay. And just sat there.
Yeah.
Right. So I had somebody who was a doctor, and his wife, also, I don't remember what her job was, but he instructed her to take care of the insurance because they bought a house on Madeira Beach.
Okay.
Okay. Do you know where that is?
No.
I didn't either. But if you take the little strip of land that comes down from Clearwater. Okay, so it's literally a strip of land with like houses on each side, but it's sitting out there. Okay, she bought it cash. Okay, she wanted insurance, but I advised her flood insurance, and she fought me on it because it was $5,000 for a $10,000 deductible. I said, listen, you're sitting out there. You're gonna need. Now this was May. Okay, so she went with it, right? The new house that they just bought cash for $1 million, she sent me pictures. I mean, it was flooded all the way up to like, I would say 6 to 8 feet.
Ooh.
Right? Now, if she didn't have that flood insurance, and she actually called to thank me, okay? But it was almost like I knew, like she didn't know because she didn't live in Florida. She lived in Maryland, and she had never invested in Florida before. I almost didn't write the original because she wouldn't take that. And if they don't take it, we have to get documentation that you're not going to take it. So you're right. If you don't have a mortgage, there is no flood zone. There is no mandatory.
Yep.
If you don't have a mortgage, you can do what you want.
And no one's going to send you letters reminding you that.
But you got there by making smart choices, by paying off your mortgage somehow.
Yeah.
You're able to do it. Don't make a dumb one at the end.
And unless you are able and willing to go, I'm willing to pay for an entire new house, possibly.
Right, but the dirt is really where your value. They're saying the value is.
Yeah.
A lot of it's the house too.
Once you start getting into reproduction
Right.
costs, all of a sudden that house is very valuable.
Cleanup is super expensive.
Yeah, just crazy.
Debris removal, unbelievable.
So in closing, is there anything, final word? What's a message that you would most want the average consumer to know about your industry or just home insurance in general?
Well, like any industry, you need to pick the right people when you're looking. We get very good reviews here in Florida. We do best by our clients. We're going to tell you no if you already have a good deal. Okay? Like, we're going to do what's best for you, not us. Okay? We're here to offer a service. Look around. Make sure, we're not going to do it like a car dealer where we're trying to get the sale, it's so obvious, right? Like, here you go. If somebody's on you too much, maybe think about why they're on you too much. Okay? Go with someone who has experience, someone who's been around it for a while, who knows what's going on. And in our industry, we have to take classes, just like you, to stay up to speed with what's going on. So,
continuing education.
Yeah. So someone who's had 20, 25 years, I feel like I know what I'm doing.
Yeah. So I hope you enjoyed that episode of Jack's List. If you think you might be overpaying for insurance or just want to find out if there's a better deal out there, please give Denny a call. I'll include his contact on the page or in the link in the description below. Have a great one.